Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Wednesday everybody. Today we received a lot of new economic numbers for the first 2 months of this year. It's often useful to look at January and February together, as Chinese New Year falls at different times each year. But this year is especially useful as it also gives us our first idea of how China's economy is looking post-zero COVID and opening up. So, how did the economy do? Well, the best word for it would be mixed. The numbers were more or less in line with expectations, but coming off such a low base, they are only good when compared to how poor things were during the zero COVID era. Quote, "There are not many bright spots in today's data." End quote. Industrial production for the January-February period rose by 2.4%. Real estate investment was down 5.7%. But fixed investment rose by 5.5%. This also helps explain the large increase in debt during this period, with aggregate financing up over 18% at an annualized rate in just 2 months. The drop in real estate investment follows a 10% decline in real estate investment for all of 2022. As anticipated, exports were down, but there were some good points in the numbers. Quote, "Factory output also accelerated after 3 months of deceleration, consistent with the improving PMI data over the January-February period and reports of easing supply chain bottlenecks. Electrical machinery and equipment manufacturing was a clear bright spot, gaining on a double-digit year-on-year pace." End quote. Now moving from the optimistic to pessimistic, Beijing has identified unemployment as a serious policy challenge, and the official data once again demonstrate why. Urban unemployment was up to 5.6%, and the situation in rural areas is believed to be much worse. And then there is youth unemployment, which remains frustratingly high at over 18%. And while we can point to places like Spain as being equally concerning when compared internationally, the average youth unemployment rate in OECD countries in 2022 was around 12.8%, and in the US it was below 9% last year. Earlier this month, former Premier Li Keqiang vowed that China will create 12 million urban jobs and make solving the problem of finding employment for college graduates a priority. However, as local finances have become increasingly strained, some analysts question how many extra, likely unproductive, jobs local governments can provide. And the trend in the private sector is not particularly positive either. According to Beijing-based Big One Lab, total jobs posted in China for the 2-month period, January through February, has plunged by almost 1/4 year-on-year, and this is despite the country opening up. In addition, a new report from the China Institute for Employment Research showed the ratio between market demand and job applications in China was just 0.57 for college graduates in Q3 of 2022, lower than the 1.24 in 2021 and 1.38 in 2020. A ratio below 1 indicates, quote, "very fierce competition," end quote, for jobs. Quote, "The weak point is from the surveyed jobless rate. The relatively high jobless rate seems to suggest that the further recovery of consumption will hinge on policy dynamics." End quote. Hey guys, if you enjoyed the episode, don't forget to hit that like button, and for anyone who wants to provide some extra support to help keep the channel going, Patreon and Buy Me a Coffee links are in the description below. Thank you so much everybody for the ongoing support. Now let's continue our observation of the official economic numbers published today. The data point some analysts are most interested in is of course retail sales growth, as this acts as a good proxy for consumption, and it is consumption which commentators and officials are hoping will keep China's economy afloat this year. Retail sales climbed by 3.5% year-on-year, driven by online retail sales of physical goods. Quote, "This increase is a welcome respite from declines at the end of last year, although we are all hoping and expecting to see much faster increases in the next few months. The economy is certainly moving in the right direction, and I expect it will continue to do so for the next 2 quarters, but we need 2 to 3 more normal months before we can have much confidence about expectations." End quote. Other analysts share the cautiously optimistic wait-and-see approach. Quote, overall, the data confirm what more timely indicators, including the PMIs, have already suggested, that the fading of virus disruptions led to a rapid improvement in economic conditions at the start of the year. End quote. And, quote, we expect China's growth momentum to improve further in coming months, driven mainly by the ongoing consumption recovery and still accommodative macro policy. End quote. We also note that 3 years of zero COVID have savaged corporate and private balance sheets, and this will take some time to repair. Some analysts too are still not happy with the numbers, however, and believe more fiscal support is needed. Quote, China's activity data at the beginning of 2023 was mixed, demonstrating steady rather than accelerating momentum, which also indicates strong policy support is needed to unleash the growth potential. End quote. Next up, in a great development for people wanting to travel to and from China, on yesterday, China's Department of Consular Affairs announced that Chinese embassies abroad, as well as visa agencies at ports of entry, will resume issuing all types of visas. In the official statement, the government department said that authorities will resume visa-free entry for certain groups as well, including those visiting Hainan Island and foreigners entering the southern province of Guangdong in groups from Hong Kong and Macau. Through the application of these long-awaited changes, from today, Wednesday, China has resumed issuing various types of visas to tourists and other foreign travelers. After 3 years, cross-border travel to the Middle Kingdom is finally loosening up. Quote, foreign nationals have faced enormous hurdles traveling to China since March 2020, after Beijing essentially closed its borders due to the global pandemic of COVID-19. Tuesday's announcement comes as China seeks to restore cross-border travel to pre-pandemic levels as the country emerges from its strict zero-COVID policy that took a heavy toll on its economy. End quote. Commentators point out, though, that the next step is to ramp up flights in and out of the country, as the current situation remains stalled, especially between the US and China. Chinese financial media outlet Caixin writes yesterday, for example, that Chinese airlines have significantly slashed plans to add services to the US due to regulatory hurdles, while American carriers have been hesitant to do the same to China due to uncertainty with Beijing's policy. Quote, civil aviation authorities in China and the US capped the number of flights in tit-for-tat measures during the pandemic after China strictly limited international travel starting in early 2020. And the number of flights between China and the US is still limited. Even now, most airlines, including Air China, propose to add only one weekly flight. End quote. Okay, that is today's episode of China Update. Thank you so much, everybody, for watching. Have a great day wherever you are, and I will see you all tomorrow.